Hey, good afternoon, everyone. This is Mark from Right Line Trading, and uh, hope you had a really nice afternoon. And I appreciate you giving me your time. This is not going to be a long webinar, but I'm going to introduce you to a new kind of candle that I have not seen before. Now, I've seen a couple of other traders have told me they've seen it around in the past somewhere. But as far as I know, excuse me, I'm not seeing it, and I want to show you the tremendous advantages that it offers. Now, first, I just want to go over a couple of the traditional ways that we track price. And this is a time chart, and right now we're looking at a 2 minute. This is a 50 and a 15, and for me, a lot of people can trade it successfully, but there are two things that determine the size of a time chart, the size of a candle in a time chart. One is how far the market moves, and the other, is the amount of time that you pick. So, say in 2 minutes. So that there are two variables that determine the size of the candle. And those variables are how far the market moves and the unit of time that you pick. Optimally, you'd want a candle where there's only one variable that determines the size of the candle, because that's going to give you a little bit of a smoother tracing of price, and I think one that's a little more it's a little easier to trade. And if you look at range, you can use range bars. Now, range is determined by only one factor, and that is how far the market moves. There's no component of time. Here's range. Now, for a long time, I traded range. Now, it gives you a really nice idea of who's in control of the market. It shows engulfing candles. It shows you can read all the Japanese candlestick patterns from it, as you can off of the time chart that I just showed. But it also brings into the assessment of price a lot of noise, and it's sometimes difficult to ferret out a trade from a range bar. In the last year and a half, the market's been real choppy. This is the one thing that you can read real well off of this price, off of range, is consolidation. Right here. And you can see that price almost always breaks out of consolidation in the same direction it went into consolidation. It comes up into it, goes into consolidation, will usually break out in the same direction. This is a dark cloud cover, which is a piercing candle, which is a topping formation. So it gives you the ability to read Japanese candlestick patterns really, really well. The problem with Japanese candlestick patterns now is that 400 years ago, and You have to excuse me, but I really have a little bit of a bad bronchitis. Is that 400 years ago, when the Japanese rice traders created these patterns, they made the assumption, which was accurate at the time, but is no longer accurate anymore, that the power of each buyer was approximately equal to the power of each seller. Back then, that was very, very true. So Japanese candlestick patterns were extremely powerful. But as time has progressed, their value in predicting how the market's going to move, I think has waned quite a bit, because we now know that the power of each buyer is not equal to the power of each seller. We've got actually groups of traders. And in fact, even among commercial traders, we've got large commercial traders, small commercial traders, and then we've got the institutional traders. They really are divided into groups. And unless this is true, these patterns will have less and less predictive value, and be less and less important in determining how the market is going to move. Let's see, this is another pattern that I really like. It's right here. It's a move into consolidation that moves right into resistance. And this would be your exit candle. Out. Go in. And come out. Just like that. I think the consolidative pattern is still pretty strong. But I think what gives you the real edge in trading, and now I just want to quickly look at Renko, and warn you about Renko or Renko. Now, a lot of platforms proffer it because it looks cool, but trust me, it is not a candle to trade. And I think it's the thought of it was actually really bad. The reason is that it doesn't allow price to express a wick. So you have no idea inside this brick if how powerful the movement of the bulls were, which would actually be up here, actually. All you know is one thing, and that one thing is not enough information, because you only have on each Renko bar, you only have an open and you only have a close. And therefore, the number and type of indicators you can use are limited. Now, if you heard me talk before about Renko, you know that there are extremely expensive software packages out there that trade Renko and offer you an oscillator. But no oscillator works. It doesn't matter if it's stochastic, RSI, Williams K. Can't type. No oscillator will work. because an oscillator requires 4 components: a high, a low, an open, and a close. Now, many other indicators do as well, but this is the largest class of unbalanced volume requires it. There's a couple of others as well. So it narrows the number of indicators which can work when you're using it. You have to be very careful not to try to use an oscillator because it's just not going to help you. All it's going to do is trace out a percent K that is totally useless because it doesn't have enough data per candle in order to give you an accurate overbought, oversold signal. So it's just totally useless. Now then, let me show you standard Renko. Now, standard Renko, I think, is a step up from Renko, because standard Renko project a wick. So you know, on a move up like this, if you see a pullback here on a wick down to support, you can enter the trade because the bears have pulled the market down. This wick is essentially what's known as a bear failure. The bears tried to pull the market down. They pulled the market into support and they failed. And the bulls were able to take control of the market and push it right back up. Your entry would be 1 tick above the close. So it gives you a little bit more information about what's going on inside the trade. And that wick is extremely helpful in an extended move. Right here. Now that was the consolidation I traced out for range. And you can see that consolidative pattern would have been tradable off of Renko. Now there's a lot, Renko and range have a lot in common. They both have a preset size. There's no time component. There's no tick component like tick candles. And in fact, some of the indicators or some of the assessments on our chart, which uses Renko to trace out price, are based off of range candles inside the indicators, because they have a lot of similarities, and you can see it right here. And it's always going to help you to have those wicks. The right here is a very powerful formation. This is what's known, if you're not sure about this trade, on the first move down, this first move down is a bull failure. You can see the big wick. The bulls tried to push the market all the way up and they failed. But the market looks a bit overextended because the move started here and came all the way down. Then you've caught these counter trend traders in the wrong direction, which is always great to be able to do. So when this rolls to the downside, you get to stop them out, and that's going to further propel the move lower. If you're not sure of taking the trade on the first candle, you can always wait for the second candle. You can't wait for the third, but you can wait for the second. Because if the second candle, because the first candle, the trade can run away from you. And if it does, it does. If you're not sure about the entry, it's always better to step aside. Better to miss a winner than to pull in a loser, as I always say. But the second candle also gives you a bull failure. The bulls again tried to pull the market up and again failed. So now you've got two attempts by the bulls to reverse the market, both unsuccessfully. Now you've got a much safer entry right here and down. Now these are all configurations really based off of Japanese candlestick patterns, based off of what we know is going on inside a candle, based off the power of the bulls and the power of the bears. And you can't see any of this on a Renko. It's all completely obscured. Now, Unirenko, because it has a high, a low, an open, and a close, will give you a correct assessment with an oscillator, which is a big plus. You don't have to worry. It's not going to do it on every candle, but it doesn't need to. As long as you get it frequently, the formula is enough to propel the oscillator accurately. And I can show you one more really nice formation. I mean, I consider these to be very uniquely Unirenko Japanese candlestick formations, right here and right here. Now we trade these every morning, and they're very successful. Now you're never going to get a perfect engulfing candle with Unirenko. Excuse me. I told you I have really bad bronchitis, so I'm sorry. You're never going to get a perfect engulfing candle with Unirenko, simply because the way it's configured. And I don't want to spend much time going into its configuration, what goes into it. But I can tell you that for crude, every candle body must be 7 ticks. Now that's the illusion that Unirenko provides you. Now, a lot of people have said to me, "Are you aware of the ghost patterns inside Unirenko?" I was never quite sure what those ghost patterns were, but I'm going to show you what they are. But I'm moving ahead. Let me just continue with what I was saying. You can see here, price is up here, right here, close to the top, and price is right here, close to the bottom. So when you get two reversal candles in a row, it shows that the bulls have tremendous power here. Not only did you get a pullback, remember we looked at the trades where there was a big wick. Here's where the bears had enough power to actually turn the market for one candle. But then the bulls came right back and turned the market right back up. That's a great entry candle. Because you've caught, and you always want to do this on every entry, a ton of buyers in the wrong direction. You want to, as they stop out, this move is going to fire up. And the same thing happens here. Two reversals in a row. Down, a counter trend reversal, and then a trend reversal right back into the trend. And your trade is right here and long. So you can see that I think that Unirenko have a lot of strength. Now, as part of the special, I want to show you these two moving averages. These are very unique. And I think they will improve your trading too. And then I'm going to show you actual unirank, hybrid Unirenko. This is not a 50 SMA. This is a 50 EMA of a 50 EMA. The calculation is done twice. So the 50 EMA of a 50 EMA provides this line with the speed of a 50 EMA, but makes it a lot smoother. A 50 EMA, a bare 50 EMA gets jerked around a lot by price. I never like that. This line is a 15 EMA of a 15 EMA. Now I'm gonna put a 15 EMA right over it, and you're gonna see how much nicer it moves. I'm gonna tell you why you need. Now I always used to laugh at people who traded with EMAs until I started looking at Unirenko. Now there's the EMA, and you'll notice how every time there's a down candle, you see how it gets pushed down. It gets pushed around a lot by small movements in price. And right here, you see how it's all bent out of shape. Where our 15 EMA of our 15 EMA stays smooth. So what we gain with a lot of smoothness with approximately the same speed. So we were able to pull the best of both worlds. And I could go on. I'll show you one more example here. I just want to get to a choppy market, like right here. It points up here, points down here, heads up, where our average just is very smooth. I mean, it reacts, but doesn't create these peaks. Now, if you're thinking about trading Unirenko, and I would recommend it, it takes a little bit of getting used to. You have to know this too, and that is there's two ways for price to move, and I don't want to make it too complicated, but I think everyone will understand this. Price can move arithmetically, and it can move geometrically. Like that. Now, I'm going to bring up paint and show you the difference. Whoops, excuse me. Now, arithmetic movement is simply constant. I mean, on time bars, on tick, on range, price moves like that. But on Unirenko, it does not. If you have Unirenko bars, what happens is on the turns, price moves slow. But then, I need a special line to show you this. I have to figure out which one it is. Let's see if this will do it for me. No, I'm getting the same one. All right, well, I'll have to show it to you. And it starts moving like this. Hang on 1 second. Hang on 1 second. Okay, is that price starts to move like this. And I'm trying to get the exact shape, but it moves curved and up like a parabola, whereas this line is always straight. This is arithmetic movement and this is geometric movement. And you can see it really easily right here. In here, where you get constant reversal candles, price is just moving arithmetically. But then when you get into a trend here, price starts moving geometrically, because the way this is configured, every 2 ticks creates a brand new candle. So 2 ticks, 2 ticks, 2 ticks, 2 ticks. That's very fast. And that's geometric movement. We're in here, a whole bunch of ticks, price went nowhere. And this is a little bit different. This is chop, but when you get out of chop, price starts to move up astronomically fast. So that's why you need an exponential moving average to trace out price. And as part of this, we're going to give you these 2 moving averages. So you're going to get this 50 of a 50 EMA and this 15 of a 15 EMA. Now, let me show you the Renko candles. Now, they're the exact same candles. I don't have as many as I would like because they only form in real time. But what they do is they pull back the curtain on the myth of Renko and allow you to see the truth of what's happening inside a Renko candle. And remember, I told you that every single, now on the NASDAQ, which is what I used, every single candle is going to be 14 ticks. Every single candle body is 14 ticks. And every time price moves up 4, it jumps a candle and a candle and a candle. But within that 14 tick candle body, does every area have volume at price? And the answer is no. Now inside, you can actually see the true wick of the move. And it gives you a tremendous advantage because you're no longer kind of clipped by the fact that you believe, like you believe right here, that you're trading off support. Where in fact, for most of this move, support is all the way up here. Now, the reason we created it, one, is to tell us really how price is behaving. I want the candles for symmetry, and they create a nice symmetry. But you don't want to trade a total illusion. You want to know how price is really behaving, and I'll show you why. Let me find a good example of it. Usually there are a million, and of course, in this small amount I have, I'm not going to have enough. But I do have other charts up. Hang on one sec. I didn't want to show you the whole system to confuse you, but if I do, I will. Hang on one second. Okay, let me give you an example here. So here's the YM right here. And this is the full system software. Now you'll notice here on this candle. Now on the YM, this is a 14 tick candle body. And this wick is exactly 14 ticks. So it's not enough to pull out the back to show you that the bears have tried to move this market all the way down. Like here, it shows. So you can take this continuation trade up. Here, you don't see it. But if you have the modified or the hybrid Renko, you can, because you can see that the wick totally fills the inside of the candle body. It just does not have the space to push out through the bottom. So it gives you this trade. And for us, this would be a first target. And I can show you many examples of where that happens. Right here is another example. See how this wick almost pushed to the top of the candle body? It's also the pivot breaker. It's the candle that breaks the pivot. Without the hybrids, you would have no idea what's going on inside the candle. And you wouldn't, because there is just not enough there's not enough bullish power to pull a wick through the top. But the bulls do try to pull the market up. And it's enough for us to take the continuation on what is a bull failure candle pattern and down. And then there's still the standards where right here, the wick comes out through the bottom and they give you the continuation trade up. So it gives you that kind of configuration. You can tell what's going on. Also, if you're in a move, I'm losing the candles here. You can always go to the NQ. I just wanted to find a protracted move. And here's actually a good one. You can see that for most of this move, this was a high momentum, very powerful move, because the bears never got a chance for most of this to create any kind of a relevant wick all the way. Only 3 times, here, here, and here. They really give you an opportunity to get in. This is where the bears moved in and tried to turn the market. So these were great entries, all winners on the YM. I'll show you on a different market. So essentially what we're doing is we're combining Renko symmetry with the ability to actually see the wick, which tells us that the rest of this candle body is just created there by the Renko inputs, but no prices here. This is just a ghost. And when we get a full pullback here and can potentially take a continuation, and the wick has not pushed through the bottom of the candle. Now, I dropped these charts, but they're here. for crude. Now this is the trade today I took for 19 ticks right here. Now this was just a standard wick. Now for some reason, I do not have a lot of, here they go. Now right here is another entry here. But this was also a standard wick. And here's an entry. See right here. The wick almost comes down to the bottom of the candle body. It doesn't make it through, but it's pretty close. You've got the bears trying to turn the market, and they fail. When they do fail, we capitalize on all the bears that are caught in this wick. It just hasn't come out through the bottom. It's just not big enough, and it's obscured by the Renko configuration. Now we can take the move up. It happens again here, almost to the back and up. So it gives us a lot of information right here, almost to the back. Have to be real careful of the pivots. Ignoring them for the moment. But that's an entry that you would have not seen or gotten without this Renko configuration. Now, we don't trade without background bias, so I'm just kind of ignoring it. And even here, this is a standard pullback, as you can see the wick gives you a first target. But I'm looking for those trades inside. Well, let me show you the E-mini. If I can find it. Hold on a minute. A lot of people trade it. And I took this trade right here. And this is a really, I took it because of the wick. The wick pulled up almost to the top. I got a reversal candle, but my stop's 11 ticks, and the reversal pattern only went 10. So from the entry, I went 5 points on the trade. I was 1 tick away from getting stopped out. That's as tight as you ever want to see. But that was a 5-tick winner because of the fact that I saw this wick. And it was a winner, even though it created a lot of heat. Okay. So what I'm going to do is I'm going to open it up to questions. It's not that difficult. It's just the added information along with the 50 EMA of a 50 EMA and the 50 EMA of a 50 EMA. Look at the difference here now, where everything seems to be obscured and price is just not quite clear. You don't know what's going on inside this candle unless price shoots a wick up through the top. Otherwise, you can't see. When it does, you're good. Or price shoots a wick down. Inside the candle body, which is large, 7 ticks on a trend. You can see nothing. On a reversal candle, it's 5 ticks. So it provides you with that type of information and also lets you know that these candle bodies themselves are just pre-configured formations that are only there to provide you with symmetry. They're not there because price has moved like this. And it makes a big difference. And I'll just show you quickly the difference between on the same chart at the same time. We'll find a really nice entry. like right here. Now this is that second bull failure right here. And a huge percentage of these work, given the fact that you're in the right place for a short, below the 50 and pushing below the 15. Oh, I can't get this bigger. Here we go. And let's take a look at the same chart on a range. I'm going to open up that chart now. Or we can look at it on a minute, however you want to look at it. But your best shot, and we'll put it on an 8 range, which is what we used to trade crude with. And let's make the candle width a 9. That's too thick. Okay. Now this is 1029 at 336. Right here. So here's the pattern on range. This is 331. Here's 331. Right in here. Right about here. See, there's the move up. There's the move up. And there's the move down. And here's the move down here. You see the difference? I think it's pretty astounding. This is such a smoother candle to trade. And it's so easier to get a really superlative entry that I think it trumps range by a whole lot. And if we put in a 1 minute, I think you're going to be very surprised, or a 2 minute. Again, it's 331. So all you want, see, here it is. That's a very, that's a very tough candle to trade like this. There's really no clear-cut entry as far as I can tell. It just goes precipitously down because this was a very, very fast move. So in 4 minutes, the whole move was completed. Range didn't give it to you that well. 2 minutes, 1 minute is, I think it's just going to be even worse. It's going to give you 4 1-minute bars. And the only other one I'll put it up against is a tick chart. And we'll put in a 377 tick. So how price is described, or how you perceive price to move, is a very important component of trading. And getting into a great move sometimes requires that price be configured or displayed in a candle that really tells you what's going on. And in this particular case, is sort of phony, but we know that phoniness. Now, tick charts not so bad right here. Right about 331, right here. I mean, at least you get the impression before the precipitous drop that you've got to move down. And you can even, I guess, if you were really sharp here, you could see that move down, then consolidation here, and then the move down. But by far and away, this is the easiest configuration to trade. And of this is without a doubt the easiest of the Unorenkos to trade. It's the hybrids that show you the inside of the candle and show you where price is at any given time. So the cost is $99. Put it in the wrong place. For the candles, the 50 and the 15, which will help you a lot. The EMA will not track it as well. An SMA won't track it at all. But the EMA of an EMA will, and this EMA of an EMA will. And these are basically the same. Well, actually, they're a little, no, I'm sorry, they're different. This is a modified slow and a modified fast. They're preset. So you can't take, you can't make it a 45 of a 45. Because the inside of the code is fixed. So let me see if there are any questions. Okay. Hey, Randy. Highland Animal. Okay, here's the thing. That's a really good question. I think it's Lindenable. The way the NinjaTrader platform works is that if you refresh or close, you will not get the wick back. Now, there's nothing we can do about that. But if I take this chart and hit F5, all the wicks will disappear. If I close the platform and open the platform, the wicks will disappear. And that is not a function of the indicator. It's the function of the NinjaTrader platform. So as long as it's up and you're running it, you're good. When you do a daily retrospective analysis, you're good. But if you want to go back a week, if you don't close or refresh, if you do close or refresh, you're not going to get the wicks and be able to see if you missed an entry based on a pullback. And I should have made that clear on the because you're going to see that and then you're going to call me and say my wicks disappeared. But if you do refresh, they're going to go, and it's a great question. Okay, this is Minal. There's no time frame here. This is a 4 Unorenko. Unorenkos are measured in the size of the tick trend. So a 2 Unorenko, every 2 ticks, new candle. 4 Unorenko, every 4 ticks, a candle. 6 Unorenko, every 6 ticks, a candle. And we do a 10, 4, 20, and we'll show you all this. If you do a 2, you do a 2 and a 5 and a 10. Now, I'm not going to change it. Or now on the E-mini, we do a 4, a 2, and an 8. So what we've done is we've optimized the Renko settings for quite a few markets. And for the ones that we have, if you ask us, we'll give those to you. But remember, there is no time component here. The only thing that determines the speed of these candles is how fast the price is changing. That's all. I know everybody keeps mentioning colloidal silver to me. I have to tell. I mean, this morning in the chat room, I had 3 people mention colloidal silver. Vicus, I don't know. I'm starting to dream it. So that's what the Renko we're set at, Ron. Right here. Those are the settings. 10, 4, 20. Now, I gave a webinar a couple of Saturdays ago that lasted 2 hours and 20 minutes, where I went over what these inputs mean. Understanding it gives you a better handle. But I'll show you this. If you remove the open offset and move it to 1, you eliminate the candle body. And now you don't need the hybrid candles, because with no candle body, you're going to see every wick that's greater than 2 ticks automatically. The problem with eliminating it, though, is you eliminate all the symmetry, and the market looks real funny. And the way you perceive it visually makes a big difference in how you trade it. So you want to keep that candle body, but you still want to be able to see that wick. So if we put the open offset back, see, now we've lost the inner wicks altogether because I changed the chart. And now we need those inner wicks to be able to tell what's going on. And I would not eliminate the open offset. If you do, price is going to move. It's going to be difficult for you to track price. Okay, Ford, I got you. Hold on, the unit. Okay, I'm not sure what you mean, Jonathan. You might want to mention that you can paint hybrid candles. I rely on red-green paint. To do this, just go to the data series. And change the bar close color and the chart style. Hold on. All right, I'm gonna have to look at that because I'm not sure. I don't really see that. I know what you're talking about, but I just can't find it right now. I'm sorry, Jonathan. I'm gonna have to go back to that. We will, Brian. The EMAs, Ron, this is a 50 EMA of a 50 EMA. This is a 15 EMA of a 15 EMA. And I showed them to you where they were juxtaposed. And here's just a regular 15 EMA. I have it set by default. And you can see how differently it moves. It's choppier and it's more prone to get shoved around by price. This 15 of a 15 EMA is much smoother, but yet keeps right up with the 15 EMA. So it has its speed, but doesn't have its lumpiness. It's much smoother. And that's what I never liked about that 15 EMA. You get two down candles and it yanks them down. Here, it's nice and smooth. So it gives smoothness and speed as opposed to lumpiness and speed. And that's the 15 EMA of a 15 EMA. Sure, yeah, no, you can do that, Jonathan. All you have to do, oh, you cannot. Oh, yes, you can. I'm sorry. You can, because you can change the color for a down bar. No, you have to keep them transparent. But the candle outline, you can change to any color you like. So let's say you want the candle outline to be light silver. You can have it. Now the problem is that it's not going to comport with the direction of the candle. There's no setting in here for an up candle and a down candle. You just get a candle outline. Here's color for, hold on a second here. See, this is inside color. Inside color has got to be transparent. Candle outline can be any color that you want, but we just leave it as black. Like that. The restriction is this has to be clear inside. Now, if anything's going to highlight the candle, it would be this. But this is not part of of what we're doing. See, and there you're going to get the color, and you're still on transparent, and you're going to still get to see the wicks. But that's a completely separate indicator. No, the thing is, Dennis, is the problem is that once you refresh the chart or you close and open, the wicks disappear. Like if you look at this chart, you see the huge number of wicks. They go back for the entire day, all the way to the end, because the chart hasn't been refreshed and it hasn't been closed since early morning. So you've got a million wicks here. Sergio comes in and opens our charts at about 8 a.m. And as soon as he opens, you start getting the wicks. Now, if you don't close or refresh the chart, the wicks will not leave. When you do close or refresh, the wicks do go. And like I said, it's simply a NinjaTrader issue. We can't keep them. They won't stay. So now you can see that there's an enormous number of wicks. And okay. I mean, it's just an indicator. I mean, I have it on my, I still have the beta version. It's called AAA, my custom indicator. You just bring it down here and it just changes your Renko to a hybrid Renko. That's all. That's all you do. And you look for the pullback, like right here. The wick came almost all the way to the back. Didn't push through though, so we wouldn't know about it without it. The 50 is just about, 15's just about crossed the 50. Your entry is right here. And up you go. Now, I don't think this gives you a full winner. A full winner is 30 ticks, but it's going to be very close. It does. It's 32, it's 35 ticks. So it gives you that configurability. And right here, it gives you another right here. You can't take this trade here because you're right into the VWAP. That's an area of resistance. We don't trade into resistance. So what you would do is you'd wait for this candle. This is a pullback, one tick short of the entire candle body. Now you've got a big piece of the candle through resistance, and you're in here, and and you go up all the way. So it increases the configurability of your trades immensely. When you're looking for a great entry and you don't have one on your first candle, there's a resistance on your second, but your third just about breaks resistance with a pullback, you're in, and it gives you the winner. It's very reliable. Everything, yeah, none of the parameters of Renko, Vicky, are changed. All it does is track price. That's it. You're still going to get on the NQ 4-tick jump, 4-tick jump, 4-tick jump, and in the candle, it's going to tell you if you don't actually pull a wick through the bottom of the candle body, it's going to tell you how far prices come inside the candle body. No, there's not two sets of 50 EMAs, David. This calculation is calculated using a formula that's derived from taking a 50-period EMA and doing it over again twice. It's just one moving average right here. I mean, this is the total of a 50 EMA, of a 50 EMA. It just smooths, it just serves to smooth price. You don't, if you don't want the 15, I mean, you could only use one if you only want one. But this is the 50 of a 50. This is a 15 of a 15. Heinz, just because of time, I will do that for you, but I can't. I'm not going to do it in here because I got so many questions, and that'll take me a little bit of time. I'll be happy to do that for you personally. No, what happens, Eric, is just this: the candle's going to open by definition price is going to jump right to here. And then inside the candle, you're going to see that candle try to pull back. Now, with a normal Renko, it's simply going to, you're going to see the pullback and see the pullback, but it isn't going to leave any roadmap as to how far it pulled back. When it eventually comes back up, all you're going to see is a solid candle body. Here, what you see is the actual wick. It's left a roadmap. It's left this wick. Now, the wick cannot form until the candle jumps to here and then pulls back. Jumps to here, then pulls back. Jumps to here, pulls back. Jumps to here, pulls all the way back. Yes, it is. I just can't read your Farzan, it is. The wicks will show up in market replay, Dave, yes. Okay, Dennis, I'm not sure if you mean like a tick, a 377 tick, 450 tick. I mean, listen, that's fine. No, it won't, Gene. NinjaTrader does not allow it to be displayed. If you look at yesterday's data, just by downloading it, you will not get this. It's impossible on this platform to do. The only way that you can do that is to leave your platform open. I mean, I want to tell you that, I'm giving you all the positives, but I'm also telling you the one drawback is you're not going to see it. The only thing that you're going to see is you're going to see the actual wicks. Like you're going to see this wick right here. You're going to see this wick, but all the internal wicks will not be there. For some reason, Ninja just does not allow it to hold on to this data. The indicator is still present, but it erases this data. It won't hold it. Maybe a different platform will, but this one does not. John, we'll have it on NT8 very, 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 very fast because it's just a very quick configuration. Okay, David, it's right here. That's a good question. So when you're heading down, here's the open. Here's the high. And the low always equals the open. Right there. But you get all three numbers separate because you have a wick. And the low and the open are fixed by configuration. So you can't get a different low than the open. So those are the four numbers: the high, the low, and the open and close. NT7 now, NT8. This one shortly, Pat. This one's a real easy one for Sergio to do. No, I know, Heinz. I'm going to have to do that with you personally. I will do it. Exact. No, what it means, Steve, it does. It means is that you get more trading opportunities. And already in the trading room, and in the last 30 trades I've taken in the trading room, I had 26 winners, and I have no, I have 20. I have 5 losers, and I think 26 or 27 winners. And a lot of those entries have been off of a pullback inside the candle body that I would have not have gotten if I didn't have the hybrid Renko candles. They allow me to get into a trade where normally I would not have the ability to do so. So I took one today that came very close to getting stopped out, but went on to a 5-point winner. So it really does increase your configurability and increase your ability to get winners, especially in a protracted move like this. This one just happened to have a lot of wicks, so you didn't need it. But in some of them, you're hard pressed for a wick. And here, you don't get a wick. The only way to get into this move is right here on the hybrid pullback, on the wick inside the candle body. Definitely, Steve. No, you can switch back and forth, Dennis, if you want to. It's just an indicator. Sure, Jerry, here's the key. It gives you a pullback. It allows you to visually see a pullback that does not push through the top of the candle. This candle on an NQ, by definition, is set 14 ticks. You need a 15 tick pullback to give you a visual wick. But this is a 14 tick wick. It completely spans the entire length of the candle. One more tick and you would have seen a visual wick. But because you have the hybrids, you know that there was a significant pullback. Therefore, you take the continuation. That's what you're looking for. The ability to take a continuation on a pullback that just doesn't quite make the top of the wick of the candle body and pull through the top. And I think it's very well exemplified right here. It takes a little bit of time adjusting, but it's pretty quick and you can see it really easily. Okay. Sure, I will, Patrick. Hold on one second. Hold on one sec. Now, today was a real pain in the neck day, and I'll show you what happened. I lost 92 bucks. I had 4 winners and 1 loser. On the 1 mini loser I took, I got a huge amount of slippage on the exit. And then I was so careful, I pulled all the stops to break even real quick and snuffed out all 4 winners in a row. It's very difficult to get 4 winners and 1 loser and lose money, but I did it today. And ever since we started using the hybrid Renkos, We're at 2605, and I have 28 winners from 5 losers on 33 trades, 84.85%. It's $2,605. Hopefully tomorrow we'll hit the $3,000 mark, and we will have done that in 2 weeks. And in that 2-week period, we had Thanksgiving. We had a half-day trading session. I had one day where I had to take my son to the doctor, one day where I had to go to the doctor, yesterday where I was sick and didn't trade. And this normally it does not happen. I missed 5 trading days, and we're still going to probably, I think I have a good feeling we'll hit that $3,000 tomorrow in only 2 weeks on very few trading days. So, I mean, we're trading with immense precision. We're 85% of our trades are winners. And it's very hard to get 4 winners and 1 loser and lose money. But I did it today on awful trade management. After I entered, I squeezed every trade, and it came back and took me out. The offset candle 4, Jose, tells you how many ticks the candle's got to go down before another candle's formed. 4, 4, 4, 4, 4. Dennis, I recommend that the pullback be a tick or 2 off the top of the candle body. I mean, I want to be very conservative. This is probably just about good enough. We'll take a look and see how big this is right here. And that's a really good question. This comes back. That's 9. You know, that's probably the upper edge of where I would go. I would like to see 10 or 11 or 12. Maybe I'll take 9, but I would like to see a little bit more. Right in that area. It looks the same on every chart, Minai. I mean, I don't have them up, but you're going to see exactly the same thing on every chart that you put them on. Doesn't matter. It doesn't matter what the instrument is. They're all going to be identical. So Rory's going to send you an order form if you'd like to get them. I recommend them. I trade them. I mean, I think they're tremendously advantageous. Whoops. They're 99. And we're giving you the 50 and the 15. And the 50 and the 15 are a really nice way of tracking this kind of price. It took us a long time to figure out the best moving averages, and these are by far and away the best. So listen, everyone, thank you so much for giving me your time. I really appreciate it. I wish you the best of luck in trading. If you have additional questions, you can always send me an email. I don't feel that well, so you can't call me tonight because I'm going to head home, but you're welcome to call me tomorrow in the office. This offers tremendous advantages. I showed you one entry that was a clear-cut entry on Renko, and poor entry on range, poor entry on tick. Not a bad entry on tick, but much more difficult, and an awful entry on time. And Renko, just forget about. Don't even think about trading. So listen, have a great evening. I wish you all the best of luck. See you in the morning, Jerry. See you all. Thank you so much, guys. Take care, all. Bye-bye. Take care. Thank you so much, Naga. I appreciate it.